I mean, that's a hope and a prayer. Hopefully it works, but that's not a strategy. And on the exit,
it worked from 2013 to today, but is it going to continue to work?
well, yeah, look, that's a big question, right? And my point is sometimes you can do all the smart things and things don't work out.
Yeah.
And sometimes you can do all the stupid things and things work out. So process is very important. And the chips will fall where they fall because, again, we don't have a crystal ball. But that's why it's very important to focus on the process.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Hey, welcome back to Pillars of Wealth Creation. I am your host, Todd Dexheimer. We've got Omar Khan with me. Omar, how are you doing?
I'm doing great, Todd. Finally, I get to be on your show after, how long did it take us? 3-4 months, something like that?
Yeah, that happens, but
you're a busy guy.
Got to make it work. So, Omar, why don't you give our listeners kind of a background of who you are and what you got going on in the multifamily space?
Look, I did the typical thing, graduated from top college, worked in finance, asset management, M&A. And then when I moved on from Canada 3 years ago, I had all these backgrounds. I was managing some money for some people in my network, so I had to invest it. Moved down to Texas, started talking to people, had to talk to a lot of people actually, over like 200 people. And then I found a couple of my partners. We started investing with them, did some LPs, then got into the co-GP, bought some deals in San Antonio and Dallas. And now we're basically looking at deals in Jacksonville, Tampa, Lakeland, in and around that area. And maybe Orlando, but Orlando seems to be a little on the pricier side. So we're focusing on these three markets.
Cool. Why did you decide, why real estate? Why multifamily?
Well, why not? Right? Look, growing up, my family's an entrepreneurial family. They've run their businesses, and real estate wasn't like their business, but as a means for where they invested a lot of their money, commercial properties. So I'd kind of seen growing up, a lot of times when my father or my uncles would be talking, hey, we've got this strip mall, we've got, say, 3 potential tenants. One tenant can pay us less money, but he's a better quality tenant. All of these sorts of conversations that one has. So growing up, I kind of just inadvertently, not by design, just inadvertently, I'd grown up in that. But what I'd also seen is that a lot, if you buy right at the right locations, and you've done the right amount of analysis, and you need property manage and all that kind of stuff, it's basically like a cash cow, right? You just harvest your field. You don't have to do something cute. You don't have to reinvent the wheel. Just do the simple fundamental stuff, but do them right day in and day out. I mean, it's easier said than done, obviously. It's hard to do in real life, but it's not rocket science. Nobody's trying to create the next Facebook.
Well, let's talk about that then. How do you how do you do it right, and how do you ensure that you're doing it right versus there's so many people that do it wrong, right? There's people that lose their properties. There's people that just have distressed properties and eventually have to sell them. I mean, those are the people that I look for. So how do you do it right? How do you ensure you're doing it right?
Well, number one, I think the first thing is obviously to realize, to be a little humble and realize, look, even if you've been doing it for 10, 20, whatever, X amount of years, you're only one step away from making a mistake. So even really smart people, we know, people who've been in the game forever, they're just hitting it out of the park. They still go down. So laws of the averages say that you're always one step away from making a bad mistake. So always being cognizant of that, which basically brings me to the second point, that you have to realize that it's a team sport. So you can't be doing everything. You can't be the GC. You can't be the property manager. You can't be the owner. I mean, you can, but you're going to do nothing good then. This way you'll be the jack of all trades, master of none, and you're kind of going to do a bad job.
Yeah.
So realizing it's a team sport, but also realizing that within the team sport, you're not looking for more people like yourself. Because I think naturally we gravitate to people like ourselves. Obviously, we're humans, right? We like people like ourselves. But it's counterintuitive. You have to get people with complementary skill sets. And a lot of times it also comes with giving up a particular level of control, or your partner might have an opinion that you just don't agree with, right?
Sure.
And it's hard to accept that sometimes. But realizing that that's part of a healthy, long-lasting partnership. And you don't want a partner who always agrees with you on everything.
Yeah, I think that's actually important to have somebody that does disagree. It does have varying opinions. Not that you want to have somebody that you're arguing and fighting with all the time.
I mean, it's a partnership. It's not an argument. It's a partnership.
Yeah, and as long as you can communicate like that, where you're always consistent, constantly pushing each other, I think is probably the biggest key. You're constantly pushing each other and able to, grow like that. I think that's huge.
Yeah, but look, you also need to have the maturity to listen and accept somebody else's differing opinion, right?
Yeah.
Because sometimes you can be wrong, right? You just don't see things.
Right. Anything else on being able to, to do it successfully, not be that one that's selling the distressed property?
And then just basically, man, just building relationships. For instance, I'll give you an example. Look, when I moved down here, I knew finance cold, inside out, okay? Because I've been doing it at the institutional level for over a decade. Multifamily valuation is a walk in the park compared to valuing oil and gas leases or derivative contracts, just because of the variables, right? But I had to go out, even the fact that I had some money, I had my own money, family money, network money, I still had to go out and make relationships. And now with my partners, as an example, one of my partners is exceptional at marketing. Another has more deal sourcing experience. So I can leverage on their experiences, build on that, whereas where I provide value to them is all the underwriting, all the legal, all the due diligence, all of those kinds of things. So as an operator, as an asset manager, I can bring that to the table. Now our roles overlap, obviously. It's not like a one-way traffic, but everybody gets to focus on their strength. But that only comes with time, and that only comes with developing a deep relationship with somebody over a period of time.
So how do you network effectively and find? I mean, you came from Canada, right? That's where you're from.
I didn't know a soul when I moved to Texas.
So you moved to Texas. You don't know anybody. What were some strategies that other people can utilize to build those relationships and network?
Well, first of all, look, maybe if this was 20 years ago, I'd say it was way harder and all of that. But these days, people don't have an excuse. Between podcasts, between the internet, between just literally Googling stuff, right? Literally Googling stuff. You don't have an excuse. Look, I didn't know a soul when I moved, but I did the usual, attend the meetups, talk to people, go to conferences, and it's a numbers game, right? You keep meeting people, you keep talking to them, and as you're talking, obviously you're learning from people's experiences, but you're also kind of refining your criteria, right? Because not everybody's doing the exact same thing. And even people within the same market are doing slightly different things to stand out. So just, when you talk to people, you kind of understand what their strategies are in terms of finding partners. Look, that just comes with experience, because you can't, you have to date first before you get married, right? So you kind of have to figure out what you want, because I think it's really hard to get a partner if you yourself don't know what you want.
Yeah, no, good point. And I think not, going out there and not necessarily looking for a partner. is, I think if you're desperate, you know, you're going to have a hard time finding a partner. But if you're just a partner, if you're just open to it, it's going to be a lot easier.
Yeah, and plus, look, you might find the best partner or the best possible partner, but it just might be bad timing.
Yeah.
Right? I mean, you just might not be at that stage in your life where you can do what the partner wants you to do.
Yeah.
Right? So it's not always about the best fit, but it's also about the best fit at that moment in time.
At that moment.
Because you also have to be on the same wavelength, right?
Right. Yeah, good point. So to talk to us about some of the, we've had some conversations about some of the analytical stuff, kind of what you're seeing around in the market. People, this multifamily is really hot right now. It's the hot topic.
Yeah.
I think people sometimes get a little sloppy on their underwriting. What are you seeing, and how do you maintain, diligence with your underwriting?
Well, like, first of all, I'll tell you how I maintain diligence is because for the first 10 years of my working career, I worked 80 to 100 hours a week. So I kind of learned the hard way how to maintain diligence. What am I seeing wrong? I think people underappreciate all aspects of the game. So when you have a guru who basically tells you, hey, just attend my course and I guess you'll be a millionaire. I mean, that's a pretty easy message to market, right? Financial freedom or rat race to something, right?
Yeah.
It's an easy message to market. But think about it this way. Look, you just the same way that I can't just simply attend a weekend course and become the world's greatest property manager. Similarly, you can't literally, with no background knowledge, no idea, attend some weekend course by a guy, by the way, who doesn't even have a background in finance or underwriting. This guy's a sales guy, right? And basically become an underwriting superstar overnight. Look, like all other aspects of the business, look, your personal business, the syndication business that you're doing, what you know now is leagues ahead of what you knew when you started, right?
Oh yeah.
And it's not just big things. It's like all the small things, like where is your property manager cutting corners? Where is the seller going to hide something? Where in the contract is this, all these small little things that comes with time. So a lot of folks I see take a weekend course and suddenly they realize they can be an underwriter, they can be a property manager, they can be the president of the country, according to them, right? And I think people don't give themselves enough time, and a lot of the strategy right now is on a hope and prayer. So look, if you say your rental growth rate is going to be 6% for the next 5 years, or 5%, well, heck, anybody can make anything look nice, right? Or if your cap rate on exit is the same as when you went in or lower than when you went in, look, that doesn't take a rocket scientist to figure out. On paper, at least, you look like a genius. But looking like a genius on paper and being a genius, there's a big gap between those two things.
Yeah. So you mentioned those two, rent growth, and you mentioned, cap rate. Including those, what are other things that you're kind of looking at as you're underwriting to maintain that kind of conservative model? To, obviously we're still projecting oftentimes, but we want to maintain a conservative approach to where we hopefully can hit and exceed those projections. So what are some hot button topics and where are you at with those?
So initially for value add projects, where basically the complex work is done in the first 18 to 24 months, right? Mm-hmm. I would be looking at monthly results. I know a lot of people, I understand you have to present annual results. I get it, because you can't fit 60 columns on a page, right? But as an underwriter, I feel, and just as an analytics guy, you need to put monthly results as part of your own underwriting. And the example I give is very simple. Look, think about it this way. If you're looking, say in March, you might run out of cash, right? But by October, according to your model, because you were getting more revenue and forced depreciation, all that kind of stuff, you start making money. So if you look December to December, you feel like you're solvent, right? Like you don't have a cash flow problem. But in reality, what's happened is that if you become insolvent or you don't have enough cash in March, then none of the other renovations happen. Your lender doesn't wait for you. Your property manager doesn't wait for you. Your GC doesn't wait for you. So you never really end up understanding. You never really end up getting to a solvency, right? Because once you're in a hole, it's hard to dig yourself out of that hole, right? So looking at things on a monthly level. Then consulting with your property manager beforehand to even understand what is a realistic renovation schedule. So look, if you're getting into the game, and you suddenly buy, I don't know how, but if you buy, say, a 200 unit property and you're going to renovate all 200 units in 12 months, that might be hard, because even if your property manager can do it, you yourself might not have the capacity to even understand what's going on.
Yeah.
And then somebody might do a stupid job and you just kind of have to take it and take them at their word, right?
Yeah.
And that's where most of the forced depreciation is coming from, that rent premium everybody keeps talking about. And if you fall behind the 8 ball there, it's not going to happen then. Because once you're in a hole, getting out of it is a pain, right? So those are some of the big items. And of course, have to know about your expense optimization, and each line item. You can't just take a 50% rule. That doesn't work in real life.
Right.
You kind of have to know line item by line item. Where do you have pressure? What do you do? When do you pay taxes on time? All of these small little things.
So I think that's a great point with the monthly spreadsheet. And that's something I think about, but have never really put in front of the investors, but something I do as my own modeling. But
Yeah.
that's definitely a good thing to add in there is because, like you said, especially when you're doing a deep value add, you might be losing money first.
Oh yeah, those are dangerous if you don't know what you're doing.
Right. So now all of a sudden you lose money for 3 months, 4 months, or even 6 months, and you didn't raise capital to cover those expenses. Like you said, now you're done renovating, and now you're just praying that occupancy can come quick enough to be able to get some money to get back to the renovation. So, but when you model out a year, you'll say, well, yeah, we're going to have some vacancy at first, and we're going to not, but then by here, okay, so now year end, we're going to be making some money. So we're good, we're set. But as you pointed out, maybe you're losing 15, 20 grand a month for the first, 3-4 months or more.
Look, and the other thing, Todd, I also feel is like, look, if you know, it's not the punch that you see coming that's surprising. It's a punch you don't see coming that knocks you out. So a lot of times, look, you might be losing money, but if you have a detailed plan, you've done this before, you realize, I'll be losing 20 grand in the first 4 months, but I know I can make it up in the other 8 months. But you have a plan. So in the middle of this deep value add, you're not losing your marbles. Yeah. Because when that pressure of losing 20, 40, 60 grand just gets on you, it starts eating away inside. And then you can make stupid decisions. So if you already have a plan, you kind of know where the ship is going, you're better able to course correct. And make small little changes along the way that will help you get to your end destination, as opposed to making these massive swings, where you go from left to right, or right to left, because that doesn't work in real life.
Right. So I know you look at, companies, different companies and their underwriting and what they're seeing. What do you like to see as far as like rent growth? What are you looking at as far as cap rate when we go to sell? Let's say we're doing a 5-year hold when we go to sell. What are you kind of liking to see and why?
So in rent growth, for instance, I think that's very market dependent, as an example. So the rent growth you might get, say, in a Des Moines, Iowa, versus, say, a Dallas. Again, we're projecting. Nobody knows for sure, right? That would be very different profile, right? So number one, you kind of have to know your market, and not just historically, but also in the future. Because as an example, in certain markets that are hot right now, what's happening is that there's so much supply coming onto the market that, say 2 or 3 years of rent growth might say 6%, but because of this flood of supply coming to the market and the amount of people isn't growing as much, right? There's no way you can maintain the last 2 or 3 years. So if you look back, because what you got, it's a bit of art and science, right? Where, for instance, you kind of have to look back, but you can't go forward looking in the rearview mirror, right? So you kind of have to understand a lot of those dynamics, supply being the biggest one, right? The biggest one is supply. So on the rent growth, in decent big MSAs, we're looking, once the property is stabilized, we're looking at anywhere between 2 to 4%. Again, you can make a case either way. You can go up to 6%, but you better have a really good case. I probably wouldn't go, but I guess you can. But anything look above 4, 4.5%, 5%, that's just asking for trouble. I mean, that's a hope and a prayer. Hopefully it works, but that's not a strategy.
It worked from 2013 to today, but is it going to continue to work?
Well, look, that's a big question, right? And my point is, sometimes you can do all the smart things and things don't work out.
Yeah.
And sometimes you can do all the stupid things and things work out. So process is very important. And the chips will fall where they fall because, again, we don't have a crystal ball. But that's why it's very important to focus on the process. What are you trying to do? How do you do it? So when you do it 2, 3, 4, 10 transactions, you're not changing the process, right? You're making small tweaks along the way, number one. On the exit cap, I think it's a function of if you're buying, say, at market or if you're buying under market. So as an example, look, if the market cap rate for, say, a certain class of property is 6%, right? But that's market. You bought at market price, and there's no shame in buying in market if it's a growing market. That's the exit cap rate, say, even if it's 50, 70, 80 basis points higher, that's fine. Depending on the market, it's not a declining market, all of that. But let's assume you bought a property that was inefficiently being run, like a value-add property, but inefficiently being run. So your actual cap rate going in would be artificially low. I mean, it kind of has to be. That's why you're bringing the value, right?
Yeah.
So in that particular case, you might have to have your exit cap rate go up by 100, 200 basis points because the market doesn't really care where you bought it at. The market, when you're trying to sell, the market doesn't care where you bought the asset. The market cares what are the conditions right now.
Yeah.
So in that particular case, it might not be favorable to project it at 50, 80 basis.
Hey, I want to interrupt this episode real quick to talk to you about Nate Armstrong, our sponsor, Nate Armstrong. He's with homeinvest.com, and you want to get to know Nate. So go to homeinvest.com and just connect with Nate, talk to him, learn about his operation, what he's got going on. He's a turnkey provider, and it may not be right for you, but it could be the perfect fit. So it doesn't hurt. It's a free call, consultation just to figure out, what they do, what they have to offer. And worst case is you're going to meet a great person who's really well educated in real estate. He's done a ton of different real estate strategies, and probably he's going to teach you a little bit, even on a short conversation with him. So go to homeinvest.com and connect with Nate's company. You're definitely not going to be disappointed. It's worth it. So thanks, and we'll get back to our show. So mainly, I think the thing is to be conservative. We don't have a crystal ball, like you said. We don't know what we're doing, but we need to make sure we're diligent and having a good plan in place to make sure we're being successful.
Yeah, and look, I'm becoming of the opinion that it's better to have a mediocre plan and follow that all the way through than to have this really nice fancy plan, but that you never follow.
Yeah.
You never have the discipline to stick to it, and you're kind of jumping around all the time.
Yeah, no, good point for sure. I think it's interesting to see, and I like talking to people like you that have this, mindset where you're relatively conservative. You understand that there's a lot of people out there. I think the last conversation we had, we talked about we don't know how some of these deals are getting done, like what people are doing to make them work. And I think that's worrisome a little bit. However, potentially providing good opportunity to the rest of us that are being diligent. So,
well, let's hope and pray for the best for ourselves.
Like you said, you never know. A lot of things can happen. The market will do what the market's going to do. But if we do our job, hopefully we at least hit a single on it.
Yeah, and look, it's about singles and doubles with the occasional home run, as opposed to just going for home runs and then getting out every 9 times out of 10.
Right. Striking out every time. So Omar, let's talk about a couple different things pertaining to your business and how you've grown it. So what's some advice you'd give somebody about operating successfully as either an investor or business owner?
I think, look, I'm a numbers person, and it pains me to say this because I can't just sit behind my computer and just do whatever I have to do. Just creating relationships and partnering with the right people.
Yeah,
as a numbers person, it pains me to say this because I actually have to move and I have to, I have to do all these things that are not, I'm not bad at it, but it's not natural. It's not a natural instinct, right? But look, honestly, you can get further, like my mom would say, you can get a lot further with a kind word than you can with a harsh word and no marketing and no personal relationship, because relationships is everything. a lot of times, now if I'm stuck in underwriting or just looking at something, I can pick up the phone and call someone.
Yeah.
Right. And in 5 seconds, they can give me insight that would have taken either I would have never gotten or would take me weeks, if not months to get.
Yep. Yep.
Right. So I can leverage them and they can leverage me, but I had to develop that relationship over a period of time.
Well, and you're not going to see the deals if you don't build a relationship.
Oh, yeah. And plus, at the end of the day, it's really not. I mean, look, it is about the money, but it isn't in the sense that no broker will ever do, or no seller actually will ever do business with you if you're just, they just don't like you.
Yeah.
At the end of the day, people,
right.
it's a people's game, right?
Right. Yeah. Good point. What's one of the biggest mistakes you've made?
Oh, I think straight up, the biggest mistake was not starting earlier in US multifamily real estate. Look, how I could fix it is I wish I had a time machine and I wish I could go back and tell my younger self what to do, but I don't think my younger self would have listened. So I'm kind of stuck between a rock and a hard place.
But you're at where you're at now. You're taking action, so that's important. I agree. I think there's a lot of people that I talk to that say the same thing as well. As wish I would have started earlier. Which for me it was I was just doing single family for way too long. I was flipping for way too much. Like why did I keep flipping all those years when I could have been? I knew what was going on. Like I knew there was a lot of good opportunity in multifamily. Why did I go and do it? I don't know.
Yeah, but look, but the other part to this is when I was talking to my wife and she also said this thing. It's like, look, if you didn't go through all of that, then you wouldn't know about, or you wouldn't appreciate this. So, maybe if you just went in guns blazing the first day, maybe you wouldn't be where you are, right? Because you never had to go through that baptism by fire. Right?
And would you have made more mistakes too?
Oh, way more mistakes, right?
So, how do you take it to the next level? What's your next level and how do you take it there?
I think my next level is just improving my personal skills, my relationship building skills. Like I said, man, obviously I'm always learning on the finance, analytics, all of that side, because one part of that is experience, academic and professional, but one is just a function of time. Time experience is also very helpful, right? But I think for me to take it to the next level would to keep partnering and providing value to my partners. Look, my partner Reed even told me that a big reason why we're still partners is because I'm providing value to him on an ongoing basis, right? And there's nothing wrong with saying that. Look, it's not selfish to say that. Look, I want partners who provide value, who help me go to the next level, because I help them get to the next level, right? So continuing to partner with the right people. And continuing to build relationships and realizing that I can't do everything in one day. So I have to keep telling myself that.
Cool.
Because we always feel like I could have done more, right? And you can never win that game.
Yeah. What's a favorite book that either all-time favorite book or book right now that you've been kind of reading recently that you really enjoy?
So, I mean, all-time, I don't know which is the all-time favorite book because I love reading. So I read a lot of books. But I think a book, I've actually recommended this on a few other podcasts also, even though it wasn't something that I've recently read. But as every time I recommend it, somebody reads it, they come back and say, dude, that was totally on point. Right? Somebody used an old example. It's Thinking Fast and Slow by Daniel Kahneman and Omars Advice. Basically, these guys are Israeli economists, and they were the founders of behavioral economics. So it's a fancy way of saying that, conventionally, economics or things tell us how people should react in a situation. Should act rationally and shouldn't act emotionally. And we all know nobody ever does that, right? So this actually tells you how people actually react, and what are the small little things, biases we have in our own mind that cloud our own judgment. Because these are things we don't even think about. These just happen. Everybody's, kind of different, right? So it just helps understanding that. And it's really good in terms of, negotiation, because as soon as somebody goes in with, say, anchoring or some other biases that are in the book, you immediately point it out right there in the middle, like a switch just flips in your brain. You're like, that guy's doing anchoring. Or that guy, it just goes off in your head. You start understanding these small little points that people inadvertently put in their speech without even realizing.
That's funny. Cool. So it's thinking fast and slow. Last question before we kind of do a wrap is, what are your 3 pillars of wealth creation?
relationships, continuous improvement, and then listening to my wife.
I like that last one. That's good, definitely good advice for all of us married folks out there. So you've got a software system you're working on right now. I think are you ready to put it out? Are you putting it out there? You're getting
We're going to
ready.
put it out. Yeah, we're getting ready. We're in the beta versions of testing it out. We're going to put it out in the next couple of weeks.
Okay.
And look, again, this stemmed from our personal frustration a lot of times when we were co-investing with people that, again, look, I understand, I know the finance and some other areas, but I was like, dude, how can you not do this? This is arithmetic, okay? There's no two way, there's no opinion on this thing. 2 + 2 is 4. Doesn't matter which country you're in, doesn't matter what language you speak, okay? So seeing that, so I realized with my background in M&A, finance, all that kind of stuff, and my partners, we basically develop models that we use in our own business. We're building basically softwares out that are basically institutional quality. So these are models that private equity firms, investment banks, hedge funds, they use when they're valuing these kinds of assets. So you get that at a fraction of the price, and you don't have to go hire somebody and pay them $200,000 a year.
Sure. So you're going to, when you guys put this out, it's going to be out for the general public. Anybody can buy it.
Oh yeah. I mean, it's a subscription-based service online. So anybody can come in and we can go from there, right? And by the way, we can also not just provide you with that software, obviously online, but we can also walk you through how to do these things, right? Because we'll teach you how to do it. Yeah, because I think that's very important. You can give somebody a model, but if they don't know how to use it, what's the point?
Right, right. Yeah, because it get kind of complex. It's simple once you know how to use it, but it's complex if you've never really seen anything like that. I mean, when I send my investors my underwriting spreadsheets, a lot of them are like, I don't even know.
Dude, what is this? Right? I don't know what the heck I'm looking at.
Numbers everywhere. And so you got to kind of walk them through it. So having that support, I think, is really important. So what kind of things, give me like your sales pitch, what kind of, maybe highlights am I going to see if I buy this subscription?
Well, first of all, you're going to get something at an institutional quality that right now you're not getting it on. You have to get a similar level of quality, accuracy, and quality of reporting. You need to hire somebody at the minimum who's getting paid $150,000 to $200,000 a year minimum. Okay, nobody below that is going to offer you the same level of quality. No underwriter you hire off LinkedIn who works for Fannie is going to give you the same thing. No broker you get, because they're not in the business of being in investments. They're in the business of selling you a product. Okay, so they don't have that background, so you can't get it anywhere. Okay, number one, that's a big pitch, right? Number two is, what you're also going to realize is that the quality of reporting you get out of it, it's going to be complex, but it's going to be big enough and quality enough that when you present it to your property managers, when you present it to your lenders, when you present it to your investors, right off the top, you are going to get so much credibility that it's going to be unreal. Because now suddenly people know that you're not some Joe Schmo off the street who just, learned off YouTube, whatever. You are doing it at such a high level, and you have such high level help that when somebody asks you something, you're like, cool, click a button, go to page 3, bam, done. But for that, you need to have tools with people with a background who can provide you all this help.
Yeah.
You can't just buy this. This isn't like a $90 Excel spreadsheet, you go buy off the internet. Things like this don't exist. People don't just sell these things out.
Do you guys have a price yet that you've decided to sell it at?
No, we're looking at a couple of tiers, and a couple of tiers will determine what kind of reporting, what kind of features you get. So we're still working on that.
Okay, cool. Is there a web page that it's at right now or will be at where I can? No,
we'll be releasing that web page, but our company name is Deal Analytica, DEAL Analytica. And, once we get it online, we can give your users a really nice discount so they can test drive it and be happy and make a lot of money.
Well, by the time this airs, I think you'll probably have it out there. It sounds like.
Okay.
So by the time it airs, I'll have to connect with you to make sure that we get website and all that kind of stuff, so people can go to it. And
plus get that nice discount that you only get with Todd if you're a Todd listener.
There you go. So we'll have it in the show notes. Hopefully, by the time this airs, we'll have it in the show notes ready to go so people can check it out right away.
Yep.
I'm excited to see it. I think I've enjoyed it.
I'm excited actually for you to use it, and you tell me what you think about it.
Absolutely. It'll be fun. Well, Omar, how can people get in touch with you?
Well, they can go to our website, boardwalkwealth.com. That's BOARD walkwealth.com. They can email me at Omar, OMAR, at boardwalkwealth.com. Or if you're so inclined, text me, 214-727-8643.
Cool. Awesome. Well, hey, I've appreciated this conversation, and thanks for joining us. Definitely.
Hey, the pleasure was all mine. The pleasure was all mine. Thank you.
Cool. Well, have a great rest of the day.
Have a good one. Bye.
Hey, special thanks to Omar Khan for joining us on the show. Appreciate him taking time out of his day to provide us value. And don't forget to check out the software. We'll have it linked up in our show notes, so you can definitely check that out. And a couple of things I took from Omar. First of all, he talked about building relationships. He's a numbers guy, he's analytical, but yet that's one of the most important things for him, is to still make sure you build those relationships, have people that are there to support you and to be part of your team, and just continue to push you along. So the next thing he talked about was, it's better to have a mediocre plan and follow it through than to have this big, huge, awesome plan, but not to follow it through. So I thought that was very wise words there. It's better to have a mediocre plan, make sure you follow it through, than to have this big, huge dream and plan, but not follow it. So, and then the last thing that he mentioned would be to always have continuous improvement, continue to grow yourself, mainly your strengths, continue to always grow that and improve upon yourself. So great time with Omar. Appreciate him joining us on the show again. And, if you enjoyed this show or enjoyed others, I'd love to have you subscribe. Go on to iTunes and give us a rating review if you haven't done so already. Appreciate all of those who have. And share this out. Let other people know that you enjoy the show, and continue to help us grow. Thanks a lot, and make every day Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.